Hi everyone, this is the second video I'm doing on ETFs, with the first being more of an introductory video to ETFs. And I'll include a link to that video here and in the description to check it out. Because in this video, we're going to go a bit further by looking at crypto ETFs and how large institutions like hedge funds, banks and trading firms, for example, actually invest in them, like the Bitcoin and spot ETFs, for example, two ways that they profit from these using arbitrage, and whether they actually hold the Bitcoin over the long term that's often reported in the media. But this often being something that people just don't fully understand, because some research was recently done that showed that only 44% of institutional buyers of Bitcoin spot ETFs invested in order to adopt a long position on Bitcoin, so essentially to buy and hold, and therefore take advantage of the future price appreciation, which we will come back to again later on in this video, and look at what the other 56% are doing. So please do like the video and subscribe to the channel, so I can continue to offer more content for you in future. If you follow our social media channels on X, Facebook and Instagram, you receive daily crypto and financial education news update posts, which will keep you informed. Stick around to the end of this video to find out what services Coin Knowledge offers. Just a quick reminder that nothing contained here is financial advice, and let's jump straight in. Let's start off by looking at the first of two ways in which large institutions profit from crypto ETFs using arbitrage, which is basically where an institution will buy and sell an asset to look to exploit small temporary price differences in order to lock in a low risk profit. So firstly, let's take a look at the arbitrage and therefore difference between the net asset value or NAV of an ETF versus the market price of that ETF. And the net asset value of an ETF is the per share value of the fund's underlying assets and cash. So it's worked out by taking away any liabilities from the value of all assets in the fund, including cash. Then you divide this by the number of outstanding shares in the ETF. However, the market price and NAV for ETFs can differ slightly, which is where arbitrage comes in. And this arbitrage can happen through the process of creation and redemption. This creation and redemption is managed by large players or institutions called Authorized Participants, or APs for short. So for crypto ETFs, these Authorized Participants will have deals with ETF issuers to create or redeem ETF shares when needed in order to try to keep the market price and net asset value of the ETF as close as possible, which can differ due to supply or demand changes throughout the day. And basically, the market price will normally be higher than the NAV if the ETF has high demand with low supply. And the NAV, or net asset value, will generally be higher if the ETF has a higher supply with low demand. And what happens is, basically, if the price of the ETF goes above its NAV, or net asset value, an AP, or authorized participant, will buy the underlying assets and give them to the ETF issuer. The ETF issuer will then give the authorized participant new ETF shares at the net asset value, which they then sell on the market at the higher price for a profit, of course. This then increases the supply, hence the term creation, and therefore pushes the price back down, which was the aim to keep the market price and NAV similar. And inversely, if the ETF price falls below its NAV, the AP, or authorized participant, will buy the cheaper ETF shares on the market and give them back to the issuer. The ETF issuer then gives them the underlying assets at the higher NAV or net asset value price, which they can sell for a profit, hence the term redemption, because removing the ETF shares from the market reduces the supply and pushes the price back up, which was the aim this time. And the only real difference to this with spot crypto ETFs compared to a lot of other ETFs is that this process is cash only in the US rather than an in-kind asset swap as it normally would be, mainly because the authorized participants weren't set up initially or weren't allowed to handle cryptocurrencies themselves when the first Bitcoin spot ETFs were introduced in January 2024. So third parties like Coinbase, for example, are often used instead for this custody, which adds a level of complexity. But the process for a crypto spot ETF will be similar though. So the creation is where the AP, or authorized participant, gives cash to the spot Bitcoin or Ethereum ETF issuer, the issuer then buys the cryptocurrency, normally through its custodian, and then the issuer gives ETF shares back to the AP, or authorized participant, which can sell them for a profit. And inversely, the redemption is where the AP gives some ETF shares back to the issuer then sells some crypto for cash and gives the cash to the AP. With the largest spot Bitcoin ETF, BlackRock's iShares IBIT, using the Bank of New York Mellon for its cash custodian, by the way, just to give you an example. So this constant authorized participant activity in crypto ETFs drives profit for these institutions and plays an important role ensuring that ETF prices stay close to the net asset value of the underlying assets, as well as providing liquidity. And if we again look at an example of BlackRock's iShares Spot Bitcoin ETF, or IBIT, it actually has 11 authorized participants, or APs currently, with some big names here in ABN AMRO, BMO, or the Bank of Montreal, Bank of America, Citadel, Citigroup, Goldman Sachs, Jane Street, Jefferies, JP Morgan, Macquarie, UBS and Virtue. And the US Federal Reserve actually published some research it did on the liquidity and net asset value of the largest spot crypto exchange traded products, or ETPs, and other large ETPs on the 28th of March 2025, which is quite complex, and I'll include a link to that in the description of this video in case it's of interest. So hopefully that makes sense. Let's now move on to the second way in which large institutions profit from crypto ETFs. And this institutional strategy is called the basis trade or carry trade. This again is a form of arbitrage and is where large firms will exploit price gaps between the spot crypto and crypto futures prices. So what an institution like a hedge fund will do is buy a spot Bitcoin ETF, like the iShares Bitcoin Spot ETF or IBIT in the US, for example, which is the largest one. But rather than just hold this ETF and adopt a long position on the price of Bitcoin, then they'll actually short the equivalent amount of futures contracts. And when there's a difference between the spot and futures prices, the institutions will close both positions, earning the profit of the difference minus costs. So again, this is an example of arbitrage, as the institutions are adopting a long position through the spot Bitcoin ETF, let's say, and then shorting Bitcoin futures at the same time, profiting from the price difference. And Marcus Thielen, who's the head of research at the firm 10x Research, put out some analysis towards the end of February 2025, stating that only 44% of the Bitcoin ETF net inflows have actually represented genuine long-only buying, with this equating to $17.5 billion out of the total $38.6 billion at the time of their research, with 10x Research stating that more than half of spot Bitcoin ETF investors have used these for arbitrage strategies that I've just mentioned, and therefore just 44% of inflows are tied to long-term investments. So this means that the majority, so the 56% of Bitcoin ETF net inflows, are likely to be using these arbitrage strategies to make profit, not necessarily to hold the spot Bitcoin ETF over the long term. This therefore somewhat reduces the institutional demand for Bitcoin as a long-term asset compared with what we see reported, with this obviously being quite complex. And if we come back to the largest spot Bitcoin ETF, BlackRock's iShares Spot Bitcoin ETF, we can see some of the largest shareholders here, including Brevan Howard, a hedge fund, Goldman Sachs, which obviously again has a substantial presence in the hedge fund industry, with more names here that are hedge funds and large trading firms. So to summarize, we've seen that crypto ETF inflows are not just buy and hold, unfortunately, due to the arbitrage strategies that we've seen from institutional investors. Firstly, the creation and redemption model, which is where institutions use authorized participants to profit from deviations between the net asset value and market price. And secondly, the spot futures carry trade that we've just looked at. But that ends this video, and as always, I'd love to know what you think about ETFs in the comments below and the arbitrage strategies that we've looked at. Just a reminder that if you're interested in more of a tailored approach to your crypto education and you think you'd benefit from having someone look over your shoulder and guide you on your journey, I do offer one-to-one coaching to those who have the desire and the means to educate themselves further. And there are links in the description where you can message me and book in a free video call to see if we'd be a good fit. You can also sign up for a free account with Coinly using the link in the description to this video, which is one of the best automated crypto tax platforms out there. If you're looking for more specific crypto tax advice based on your personal circumstances, I've partnered with a leading UK crypto tax company in Miner, which is part of the company Nephos, that offers other services such as wealth management, restructuring, offshoring, etc. But I'll leave a link to contact them directly in the description to this video. If you're based in the US and are looking for specific crypto tax advice based on your personal circumstances, I've partnered with a leading US crypto tax company called Crypto Tax Audit. And again, I'll leave a link to contact them directly in the description to this video. I've also included a link to Trezor's website in the description for anyone looking for one of the best hardware wallets or cold storage out there in our opinion, with 2 new models released relatively recently in the Trezor Safe 3 and Trezor Safe 5 that I did a video on that you can find a link to here and in the description. And finally, if you're looking for a portfolio tracker for your crypto portfolio, then I've included a link to CoinStats in the description of this video, which is the leading crypto and Bitcoin tracker on the market. And if you found this content interesting, please do like the video and subscribe to the channel, as it really does help. And have a great day.